What's going on, YouTube? Welcome to the Credit Plug channel. So for today's video, we have a very special guest. We have Diego from Uplift Capital. He's going to be going over some very valuable information to share with you guys. Welcome to the channel, Diego.
How are you, Antoine? Great. Glad to be here.
Absolutely, absolutely. So could you share a little bit to the subscribers about your background, as well as, what exactly is Uplift Capital and what types of products and services does Uplift Capital offer?
Of course. I'm the head of marketing currently at Uplift Capital. We have a team of 70 people as of July of 2022. We started our operations around 8 years ago to provide primarily merchant cash advance to small business owners. During this time, we have evolved to offer a variety of products that includes credit, term loans, SBA brokers. We believe we're handling over 400 business owners daily, and we're originating anywhere from 2,000 to 2,500 loans per month.
Excellent. Excellent. So I wanted to dive in really quickly and talk about some of the different loan products that you mentioned, MCAs, lines of credit, SBA loans. Can you sort of break down, for example, like in terms of easiest to most difficult in terms of requirements, let's say time in business, business revenue, credit scores, and just additional documentation? How would that look in terms of like the types of products?
Our philosophy is that we are in the unsecured finance vertical. And as it is, our main strength is that we can get you a cash advance or a term loan within 24 hours. I would say that's the most easiest one. And the requirements are very straightforward. You need to be doing at least $10,000 in gross revenue per month into a business account. There's no credit profile required for this. You need to be able to use this money to generate profits, catch up on perhaps some delayed payments that can get you ahead. But the idea and the philosophy that we have is that we're going to give you the money to help you grow instead of putting you in a situation where you're over leveraged and you cannot move forward with your business. Aside from that, I would say that the second easiest is a line of credit, but you need to establish business at least with 1 year of constant growth and a credit score of higher than 600 points. And the last option, it's SBA, which will require at least 2 years of tax returns. And we can take care of the rest for you, but it will require a lot more documentation, both from the owner and the business itself.
Just in terms of, documentation, because a lot of our audience, are newer business owners, and, some of the different types of documentations you may not encounter or you may not be able to produce when you're first starting out, let's say 3 months, 6 months, business bank statements, financial statements, profit and loss statements, schedule of business debt, tax returns. So how important is it for small business owners to have certain types of documentation when they're applying for different business loan products?
I think primarily for us, the biggest challenge that we found nowadays, it's the fact that a lot of business owners are operating out of a personal account. And we encountered this day in and day out, even more so after the pandemic. I would say 60% of business owners currently in the United States don't have a business account. And I could mention a few, but it's as easy as going with your IAN and acquiring one that it's completely free. Once you have that, you have enough leverage to use any of our products, I would say. But the rest, it's a little bit more complicated. Financial statements, tax returns, P&L. You can have that, but it's not a requirement. If there's a message that I want to provide to your audience, it's get a business account. Get a business account. Start depositing everything into your business account. It will have tax benefits as well. But not only that, you will create enough business credit and enough business profile that would allow you to leverage your business in many ways.
Especially nowadays, there's a lot of lenders who actually focus in more on not just the credit, but also looking into business banking activity. I think that's a great message to get across in terms of establishing a business checking account to conduct your business activity. Another thing that I see a lot too is, although it's convenient, a lot of business owners will use Cash App. And unfortunately, a lot of lenders don't recognize Cash App.
I was looking at the figure of 2022, and there's 70 million sole proprietors currently in the United States, and half of them are using Cash App as their main point of operation, which is great. But if you want to use financial services, even though we're not as strict as a bank, because that's the whole point of coming to a lender like us. You don't have perhaps the profile that a bank requires. You have a new type of business, new type of industry, new idea, but you're making some money and you want money to help you grow. That's where we come in. But sometimes these customers don't have the necessary requirements, which are minimal, to be quite frank. But still, I would recommend anybody hearing this conversation, open it up. Even if you're not even profitable yet, even if you're not making any money yet, that will be my first step. I establish my business as an LLC at least, and open a business account if I have a good idea to work with.
And so I also wanted to talk about conventional financing versus more or less, startup financing or financing for newer businesses. What would be the best route? And is it feasible as a newer business to go after conventional financing? And if so, what types of data points would they need in order to meet those requirements?
That's a great question. And I think I have two answers for it. There's two types of customers that we see calling themselves a startup. There's the person that has the idea but hasn't take any action, and there's a person that actually have a business and it's operating over the last 6 months, 3 months, a year, and it's already in operation. To the person that has the idea and hasn't take any action, we cannot help them at all, at least on unsecured finance. There's nothing we can do to provide them with capital unless they have a track record, unless they have some type of business profile, unless they have a business account. To the person that it's in business already and it's been going on for the last at least 3 months, they can search an option like for Uplift. Like I said, the only requirement that we have is based on cash flow. Time, credit, it can all be argued as a secondary condition. The first condition is if the last 3 months you had 10 grand deposited to your business account, give us a call and we'll try to help you. And if it doesn't, we'll still try to provide customers with options, because at the end of the day, somebody that is looking money, it's trying to solve something. And that's all there is. We're trying to provide a solution. If we can't, we'll try to find one for them. And I think that's missing in the MCA and the line of credit industry. Everybody's pushing their own agenda instead of actually helping the customer with their needs.
You mentioned that cash flow is going to be like the main data point that's being considered. So I want to lay out two scenarios for you, right? So let's say an applicant who has the cash flow, but let's say their credit score is bad or, subprime. But then you also have someone, they have a business started, they may not have the cash flow, but they have a high credit score. What are the two options for those two different types of borrowers?
So the first type of profile, it's the one that we specialize in. That person that perhaps doesn't have the credit, but has an outstanding cash flow, has use for that cash flow, and we can help them grow and we can grow together. We tend to find that these people acquire capital throughout like a period of 6 years, at least 6 times, and we help them grow, even though their credit was not worth it for the bank. And that's our specialty. For the second person, the one that has great credit, perhaps not great cash flow, honestly, at Uplift, there's nothing much we can do, but I can say this and I can recommend this personally. Take the risk to get a personal loan out of your credit and put it in your business. That will be the best case scenario, because the best rates are in personal loans if you have a great credit score. If it's not a personal loan, try to get an SBA loan, which is a process that can take up to 2 months, but it can help you acquire a business that it's already in operation, or it can help you set up your own. Those are the two options that I have for the person that perhaps doesn't have the cash flow necessary to grow yet, but they do have an excellent credit score.
So another question I want to ask you now, and this is regarding MCAs. MCAs get kind of this negative association because typically the rates are going to be much higher than, let's say, an SBA loan or, a bank loan, right? Can you explain to the subscribers, why are MCAs much higher in terms of like the rates and the terms versus conventional financing and SBA? And what are the different considerations and why are they priced a little bit higher? I think a lot of people want to kind of understand that because usually, for newer businesses, right, the MCAs are going to be much more available versus, some of the other conventional types of financing. Why is that the case? Why is there higher pricing for MCAs versus, some of the other, bank term loans?
And I think you're totally right. The industry as a whole has a bad rep. And over the time, we have noticed and we have worked really hard to provide enough clarity and transparency to customers. And I think that's one of the main reasons of our success. We don't try to push anybody to get an MCA if they don't actually need it or they can have a use for them. So with that said, I would say that the main reason why MCAs are so expensive is because in reality, you can get the capital that you need within 24 hours, even the same day. And if you have a use for that capital, even more so, if you can make profit out of that capital in a short amount of time, you can basically leverage the money quicker than anything else in the market. And we strive to do that exactly. We strive to underwrite businesses that are actually going to leverage this money smartly, intelligently, and grow with us. But other than that, you're completely right. It's extremely expensive, but it also depends on the cash flow of the customer. If the customer is doing more than what he needs, then the MCA is going to be very cheap. But if the customer requires MCA that it's equal or more or higher than their current monthly revenue, the money is going to have a cost associated with it.
It's all going to depend on how you're deploying the capital, right? Because, for example, you're not going to use an MCA to go invest in some long-term assets. But if you do have a business, let's say, for example, that has a higher turnover of merchandise or, products, then it may make sense. And, I've actually worked with several business owners where they might need a large amount of money for a short a period of time, but they can generate that revenue. So it really becomes a question of like the time value of money, being able to deploy the money to have a quick turnover where it actually makes sense. Also, the speed of the funding, right? Like being able to turn the funds over in 24 hours versus if you were to go to a bank or an SBA loan, and the process can take weeks or in some cases months. So the speed of funding is also, I guess, a trade-off. The faster, quicker that you're able to get the funds, the higher price that is going to be in terms of like the documentation, right? Generally, you're not going to have to submit as much documentation in terms of financials or tax returns or 4506Ts or anything like that when you're going for an MCA. So those are the trade-offs that I think, people need to better understand why the MCA is a little bit more. And of course, it's not going to be a fit for every single situation.
I say this, like, I think the industry as a whole has matured, but we always try to push to be to clarify the customer that this is expensive. These are the terms, and this is what you need to do in order to transform that in growth. But in the context that we are currently in, we found that, like, I'm talking about the recent 2 months, we're finding more and more clients that are using the capital to use in marketing, in digital marketing specifically, because they found a return that it's much, much higher than their normal profit margins. And they're able to use an MCA constantly because they transform that in profits way faster, and they scale faster that way. Every case is different, and I think transparency, it's a must. You need to be able to communicate it with the client, talk to the client, be as human as possible to understand if they actually need it or not, and tell them the truth. This is an option for your business. If you need it, great. If you don't want it, have it on the table, but there's other options for you if you want them.
So one of the last questions I wanted to ask you now, given what's going on in terms of, interest rates, right? The Federal Reserve has been raising interest rates over the past couple of months. How has that impacted, the private lending industry? How has that affected, the small businesses, in terms of being able to qualify and the cost of capital?
Every situation where there's uncertain economic environments, our industry thrives because we are able to provide them without the need of a good credit profile. Non-traditional business can come to us and acquire funds from us. For example, e-commerce, media, channels like yourself. Anybody can come if they have a business account and can take advantage of the context. So for us, this actually it's an opportunity. This is where we thrive, and this is where businesses can take advantage of the risk that there is, but also of the cheap prices that we can find online for digital marketing, for inventory. Currently, inventory, it's cheaper than ever. So if you're a retail store, you can acquire more inventory. This is the time to buy.
Well, no, I definitely appreciate you sharing some insight on Uplift Capital. Do you have any parting words, any, messages that you want to get across to any prospective clients or borrowers of Uplift Capital, or any just parting words for the audience?
I think, yes, one short thing. I think people are scared. They think that they're gonna have a hard inquiry on their credit score if they apply to us. And the whole reason unsecured finance works is because you're just an option. Uplift Capital, it's providing you with an option that it's free, that it's not gonna affect your credit at all, and we're gonna be there for you in case you need us. But if you just want to ask questions, we're open as well. We try to guide you as much as we can. We even tell you that you're not a good fit for us and that you should take some steps before us.
We've pinned the information in the description of the video. We've also included the phone number and a link if anyone is interested in applying. Again, pleasure to have you, Diego. Definitely appreciate all the insight. Until next time, take it easy and we'll talk to you soon.
Thank you.